Good day. Thank you for joining me for this month's market update of the PSG Wealth Offshore Solutions. Looking at a backdrop of markets in November, global equities rallied strongly, mainly due to the several vaccines providing effective against the COVID-19. US equities surged as vaccine breakthroughs sparked investor sentiment that a return to economic normality is in sight. In the Eurozone, expectations of global recovery supported shares, with the region a particular beneficiary given the high exposure to global trade. Within the UK equities, these also performed well, helping them to recoup some of their year-to-date underperformance versus other regions. Sentiment was also helped by the hopes of a no-deal Brexit that might be avoided. However, the recent developments have seemed to muddy the water. Looking at some fixed income indices, the improved risk appetite saw comparable bonds outperforming government bonds. Government bond yields were volatile during the month, with large swings around the US election and vaccine news. Corporates and emerging market bonds performed well, outperforming their government counterparts. Looking at another matrix breaking down the fixed income indices into their different maturities, as well as government, corporate and high yield. In the US, all indices reported positively, with the biggest gainers we saw long duration, high yield bonds, continuing their positive streak. Just touching on the PSG philosophy, as you are all aware, we employ a split funding approach within the solutions and therefore do not take any sectoral or directional bets. Instead, we focus on three pillars of consistent above average performance, at below average risk and at a competitive price. Looking at the individual portfolios, we start off by looking at the assets under management for the global fund of funds. Here we can see on a month-by-month basis, the funds have continued to increase their AUM into the solutions. November saw a massive month for markets, and the solutions benefited on the back of this. AUM growth over the month increased by approximately $149,000, taking the AUM to $1.821 billion. Through these turbulent times, the PSG selected managers have maintained consistent performance, with 57% of the underlying managers outperforming their peer group over the 6-month period. Extending this out by 3 years, we can see 92% of the underlying managers outperform their benchmark. We continue to look at the disconnect between growth and value, and as we can see on the bottom of the slide, the disconnect continues. Year to date, growth produced 27.9%, where value is still down negative 3.9%. However, this did come back significantly over the month. Looking at the PSG Wealth Risk Radar, only one fund appeared on the risk radar this month. Looking at the underlying managers, for the Global Preserver, we've made no changes to the managers held within the fund, and we continue to monitor the ability of each of the underlying managers chosen. Having a look at performance, for the Global Preserver, the fund rose 4.89% in November, outperforming its sector for the month by 123 basis points. The fund remains behind the sector over its recommended holding period of 3 years, however has closed that gap significantly. The fund is above the sector average since inception again. Looking at the chart, here we show the 3-year rolling return since inception against the peer group rank. Due to the fund holding higher exposure to dividend yielding stocks and fixed income securities, it has felt some pressure in the short term. The low interest rate environment found our underlying managers searching for yield and therefore looking to position in these securities which offered better long-term risk-adjusted performance. Even with the recent downturn, the fund has still remained 82.3% in the upper half. Having a look at the global moderate, With the initial changes that we made in the beginning of the year, these have benefited the portfolio and therefore have not made any further changes. The fund rose 8.53% in November, unfortunately just underperforming the sector by 55 basis points. The fund is above over its recommended holding period of 5 years, as well as since inception, by 54 and 20 basis points respectively. Looking at the ranking tables, here we can see that the fund remains within the second quartile, and 50% of the time is above in the top half. For the global flexible, we've made no changes to the underlying managers and are still happy with the balance within the portfolio. The fund rose 8.35% in November, outperforming the sector for the month by 204 basis points. The fund remains above the sector over its recommended holding period of 7 years, as well as since inception by 6 and 6.25% respectively. As you can see from the relative tables, the fund has remained exceptionally well, performing in the top half and top quartile 100% of the time. For the global creator, we've also made no changes to this portfolio, and we do continue to monitor the manager interaction with each other. The fund rose 11.63% in November, underperforming the sector by 40 basis points. The fund, however, has still outperformed over the recommended holding period of 7 years by 3.49% and since inception by 2.67% per annum. Looking at the relative tables, here you can see that the fund has remained in the upper half 100% of the time and in the top quartile 84% of the time. As a conclusion, the peer group rankings remain strong across the board, with the longer term numbers producing favourable results. As you can see, 5 of the 6 funds have produced average and above performance over their recommended holding period, illustrated by the black rectangles. Tying this all together, we can see that the PSG managers are performing their objective of consistent above average performance at below average risk and at a competitive price. Thank you. Please take note of the following disclaimer.